Hi, this is Paul Tyler, and welcome to another episode of the Reimagine Podcast. And this is actually the fourth in a special series of podcasts in partnership with the Barney School of Management. Laura, do you want to set us up for this discussion?
Absolutely, and it's so great to be back, not only with you, Paul, but John, our reoccurring guest here. So it's our fourth episode in a limited series with Barney School of Business at the University of Hartford. We're focusing on the future of risk and innovation, and if you've been following along with us, each of the episodes has taken a different path, and I'm excited to see where this one goes today. So joining us, we have none other than John Thomson, Assistant Dean of the Barney School of Business. We have Girik Nagpal, Master's Student at the Barney School of Business, and Joe McDonald, Director of Captives for South Carolina Department of Insurance. So without further ado, John, I will hand it to you to kind of set the stage for today's conversation.
Well, great. Thank you, Laura. This topic, I think, is very pertinent and very relevant with respect to risk and innovation because historically, if we look backwards, the insurance industry has been the cornerstone of risk financing and risk management for decades, if not maybe a couple centuries. Of course, the nature of risks and the economic factors and all things that are going on today are reshaping virtually everything that we do in both our professional and personal lives. And I think the insurance industry is feeling that need and is adapting to these changes. So today we have a great opportunity to talk about this environment per se, and what the insurance industry seems or appears to be reacting to. And then kind of projecting forward to say, what would the insurance industry look like in 2030? So I've had the chance to do some work with Girik Nagpal and one of his fellow students, Sarah Gata, who did some research into this and came up with their perspective. So first, I think it's great to start out and to hear from Girik in terms of, what are some of the examples of changes that you see that are going on right now that are impacting and will impact the strategic direction for insurance going forward?
Sure thing, Professor Thompson. So what I would say is, even before we dive into talking about the future of insurance, let's talk about the word the future, right? I feel like if I were to give you a minute to close your eyes and just think about the word future, usually pretty much everyone just thinks about, I would say, robotics, technology, fancy cars, flying cars, fancy buildings, 3D printed buildings, and so on and so forth. I know personally, I think about the cartoon show, The Jetsons, that I grew up watching. They would always show you this futuristic environment of like all of these different kind of segments, basically revolving everything around the use of technology, right? Even right now, there is an elevated use of technology from what it was in the past. And I feel like going forward in the future, it's only going to be more so. I would say that by the year 2025, it's projected that there's going to be 1 trillion IoT connected devices, again, which is going to impact technology and the future in a different way. And I'm going to elaborate more on that later in the podcast. But by the year 2025, there's going to be 3D printed buildings, which are going to be more commonly seen. And by 2030, there's going to be cars, and most of them are going to have autonomous features. So again, this really changes how we look at technology, how we use technology, and how we basically live our lives, right? Buildings, cars, et cetera, which would imply a need for change, and I would say even adaptation when it comes to the new forms of risks. And again, similarly, the insurance industry itself as well. I would say there's also going to be a lot of data, right? So there's going to be open source data ecosystems. So as data actually becomes more present, these open source protocols are going to emerge to ensure that data can be shared and used across different industries, and even within a company, I would say within all departments and across all departments. When it comes to even, I would say, the distribution, pricing, underwriting, and claims, all of that is going to be highly impacted when it comes to the technology. In terms of distribution, the purchasing or the purchase of insurance is going to be much faster. And even the contracts that we're going to see in the future are probably going to be enabled by blockchain, and we're going to see smart contracts. When it comes to pricing, I would say we're really looking at an insurance kind of model which would enable usage-based insurance, not a standard that's going to fit everybody, but depending on what you need and what you use, you would have insurance accordingly. And even when it comes to underwriting, I would say most of it is going to be done through machine learning and AI. When it comes to claims, I would say even the smaller claims, which don't really need the agent's attention and can be processed really easily, can probably go through AI and chatbots as well. So there's going to be a lot of advanced algorithms. Even let's say we talk about auto insurance, there's going to be telematics that we see right now. And again, we're going to see in the future as well, depending on how you drive, depending on safely you drive, how much you drive. Again, ties a lot with usage-based insurance as well. So I would say when you think about the future, in any aspect, any industry, any company, think about technology and then apply to that. So again, to kind of reiterate, to kind of begin the discussion, I would say is going to be a lot of tech, a lot of data, and a lot of new risks because of the new way of lifestyle, I would say. But yeah, that's my kind of brief take on it.
That's very interesting. You know, Laura, I keep always trying to drag you back into the P&C world often. And what do you see as sort of the technology things? Girik sort of talked about in technology in terms of the Internet of Things and some of the other technology advances that are going to change how we drive, how we live, how we communicate. What do you see as some of the tools, the technology tools that are available for risk takers, risk companies that you've seen perhaps in the retirement space in your work that you've done at Nassau Financial, or from what you've seen done in some other areas, perhaps even in property casualty?
Sure. So, you know, like you like to drag me into the P&C conversation, I like to flip your questions sometimes, right? So when we talk about the future of technology, yes, right? In many ways that there's technical advancements that are here now. And just because people are not, you know, deciding that it's something they're going to implement or integrate into current systems, that still might feel like an item for the future when in fact it's here today. So my question really turns to, are we going to advance that much using technology, or are we going to advance that much using technologies we may currently have or currently advance upon, but really switching the mindset of the leadership teams in these companies, or switching the mindset of the employees and the people? So focusing on that human capital, right? John, you and I had a conversation last week, and we were talking about this conversation today, and you talked about AI, right? So artificial intelligence, but really flipping it to analytical intelligence or analytic intelligence. Right. So I like to think about technology. Yes, it will transform the future. With that, there could be additional risk, but really looking to see how the human capital is going to be part of that equation, and what risks are we going to work to identify or solve there as well.
Well, I mean, that's very interesting. The human capital side, it's I don't know why, but it's frequently dropped in terms of when people talk about what can be done in terms of robotics or using telematics or analytic intelligence. And I really like how you characterize that, because there's nothing really artificial about it anymore. So it's here with us today, and we understand the importance of analytics, and we understand the importance of data, and data is growing at an incredible pace. But Girik, to go back with what Laura said there, with those tools that Laura kind of talked about in terms of analytics and robotics and with new human capital, you know, with people with new perspectives and new talents for using and analyzing data, what do you see the insurance companies, insurance industry being able to generate in an enhanced environment with those capabilities?
I feel like you really hit the right topic over here. Definitely technology is one aspect of it, but another big key to it is going to be big data. And again, when it comes to big data, we don't need to only collect the data, but also analyze it. And that's where kind of AI in terms of analytical intelligence kind of comes into the picture. I would say right now, you know, we see data analytics being applied to like pretty much every and each industry, right? But the data that we are collecting, at least in the insurance industry, only 10 to 15% of it is actually being analyzed. So the rest of it is just, you know, unstructured data. Now, if we were to push that 10 to 15% to a higher percentage where we are not only collecting the data, just like I said, there's going to be more IoT devices. That's only the first step. But once you have that data, what do you do after that, right? You have to really analyze that and make sure that you tap into the unstructured data and kind of, it's only when you tap into that in relevance to data analytics, when you're able to bring order and purpose to that unstructured data. So again, from there, you can kind of have more business data mining in that sense, I would say. So again, collecting data is one, but being able to analyze that, just like Laura said, is going to be another thing.
Well, Joe and John, if I looked at our industry, I would say, we're and looked at all the insurance companies, including Life and P&C. It feels like 80% are sort of in the proof of concept stage. I think you have probably 17% in the use case. There's probably just a fraction who are really doing this at scale, and it feels like proof of concept, find vendor who can work with you. Use case, let me hire some data scientists and pay them twice what I would have paid an analyst before. But if you're really going to take this to scale, don't you really have to change your operating model to really leverage machine learning? So Girik, you're not just overwhelmed with information, but Joe and John, you've got an organization that can actually do something with the insights.
Absolutely. Yeah, Paul, I think it's really interesting to hear that conversation and to talk about this, the importance of human capital. I mean, Laura gave me great pause because you don't normally talk about that, and it's very important. And then Girik talks about sort of the order and direction and so forth, and actually how do we make it work. And it's interesting because there's a lot of good ideas that I hear and people try to develop, but everyone seems to struggle with how do we implement it and make it work and make it happen. And I think with the insurance industry, which is a very highly regulated industry, as we have out there, there's perhaps some concern on the part of the insurance companies about changing themselves because that's going to change, challenge perhaps the regulators. So, Joe, I think with that barrier or with that perceived barrier, do you think the regulatory role has the ability or the opportunity here to help facilitate this transformation that allows things to go forward and change?
Thank you, John. Most certainly, I do believe the regulatory authorities do have the ability to change. I will say that regulation is so often an effect of advancements that take place in the industry. But again, the regulatory process and the overall approach will necessarily be enhanced by the improved use of data, the improved use of technology. Increasing sophistication in insurance operations, whether that be faster, more precise underwriting, better and easier customer engagement and service, more efficient claims adjusting, novel marketing approaches to targeted customers of specific products. All of this creates the opportunity for better decision making on behalf of companies. And as insurance regulators, we obviously are fiercely concerned with solvency. And we know when insurance companies make the right decisions, this leads to more consistent financial results and stronger balance sheets, which ultimately leads to more stable and sustainable operations for insurance companies themselves. So again, although the regulatory process will certainly maybe follow in the wake of many of the advancements, insurance regulations on the whole, I think really are in step with what's taking place. A key indicator of that, we could look to possibly the NAIC. And one thing to note in this discussion is the NAIC's Innovation, Cybersecurity, and Technology Committee, which is also the H Committee. And this committee focuses on big data, AI, machine learning, cybersecurity, and is really charged with a host of things, which include tracking emerging issues related to security, event reporting, consumer data privacy protections, and researching the use of big data and artificial intelligence, in insurance, and evaluating existing regulatory frameworks to oversee and monitor their use. So I guess to conclude my point here is that all of this goes to say that as insurance evolves, so too will the regulatory framework surrounding it.
That's great. I mean, let me just follow up with that, Joe. I mean, you to me you're a next gen regulator, and from my experience and with my my career working in the risk and insurance space, the NAIC hasn't historically been a forward-thinking organization. They've been kind of very reactive, and it seems to me that it requires all of us, whether it be regulators or other parts, to be very forward-thinking. And you talked a lot about how you see the NAIC changing to do that. Do you see the regulatory process able and ready to evolve with this rapidly changing environment for risk and insurance?
Yeah, good. Well, I mean, it's going to fall on the regulators of each state. I mean, obviously, insurance is regulated on state level in the United States. So, how nimble the regulators in any particular, domicile or jurisdiction, how nimble they are. That's really what's going to come into play here. How forward thinking are they? And I do think that as the industry is infused, with new talent, as there's been a large push to do that, and that of course is going to continue to change the mindset and the framework and introduce new ideas, new concepts, and new ways to approach regulation in general, and also a better familiarity with technology and with data analytics and with the things that are needed in this space. Yes.
Mm-hmm. That's interesting. So based on what you said there, back to Laura's point about human capital, it's not only important to the risk and insurance entities themselves, whether they be insurers or reinsurers, but it's also very important for the regulatory side to have their next gen talent be able to understand and evolve with this transformation. That's interesting. Hey, Girik, but let me ask you first, what do you see as happening in the insurance ecosystem? Do you see it being static? Are the same players here today, and are they going to be the same players tomorrow, or do you see that changing as well as this environment and ecosystem evolves?
That's a pretty cool question, I would say, because insurance industry being like a 400-year-old industry, we have these players who have been in the market for a long time, like these big players. But then now we've also seen a lot of different kind of insurtech and insurance startup companies coming into the picture too. Now, another thing that's coming in are the tech giants, right? So for example, like Amazon, Google, IKEA, and like even Tesla having their own insurance. For example, Amazon, I know they've started their own they offer cyber insurance, content insurance, and so forth for their SME products in the UK, and they're planning to do so in the US soon in the future as well. IKEA partnered with Swiss Re's Iptech to launch Hemsacker, which provides home insurance products. And then Google's sister company, Verily, actually partnered with Swiss Re as well to launch health insurance products. So, and then Tesla having their own insurance embedded with Tesla as well. So again, all of these big tech giants entering the industry is going to only increase competition for the old-time players, and then maybe even in some way disrupt the way we've seen how insurance has been offered in the past and how it will be in the future. And another big thing when it comes to even kind of going back to big data, right? All these big tech giants have been collecting data, have been analyzing data over the past few years, and are pretty good at it, I would say. So again, they have that level of advantage when it comes to, they have the customers, they have the data, they've been doing, pretty well in the market. So when it comes to insurance, maybe they're probably going to be able to, do that in a pretty well efficient manner, maybe in a new, more adaptive way to how the new risks are, to the more, I would say, how even the consumers are kind of demanding and requiring insurance. That's going to be something that the old-time players are going to kind of have to evaluate as to, okay, if we don't make the adaptation or if we don't evolve pretty quick, we might lose our customers to these new tech giants or even the new insurtech companies. From one survey data that I was looking at, I think currently about like 50% of the customers are prepared to buy insurance from these new players, these new tech giants, and these new insurtech companies versus, the old time players. Again, it all comes down to what the consumer is looking for in the current market with the new generations which are coming as well. So again, if you're able to provide something which fits the module of the consumer's requirement right now, I feel like they would be in good shape. If not, they might end up just losing their customer.
So staying on that same thread.
Interesting.
I'm curious, is 2030 the year where insurance will be bought, not sold, right? Paul and I were on a call last week and we were speaking with an individual and they kept hitting home their point about insurance is something that is sold, it's not bought. But if you think about the embedded products, what's to say that, a Gen X, Gen Z, millennial, pick your favorite, goes to buy a home. And in that home purchase, they're automatically insured for the home. And, oh, hey, you have a garage. You have a 2-bay garage? Let's insure both of your cars while we're at it. Oh, and you have a dog. Let's insure the dog, too. It's like, why wouldn't we start to think of things across lines? I know that it's been split in the past, but, I see when you're unloading, your home, you talked about a nursery upstairs. Well, let me sell you this life insurance product, too. Like, why aren't we having an entire suite where I go on, my favorite little real estate app, and all of a sudden I'm looking at quotes for insurances. Like, to me, it makes perfect sense because I'd want to buy a package, and then if I could buy it all together, could I get a discount? Because you might get it, and if I can buy it in app, it might happen quicker. Joe, I see you smiling at that. What are your thoughts?
Right. So no, it's a great point. So thank you so much. I think that, when we change the conversation, this is something that John and I have spoken about before. When we change the conversation from speaking about insurance and we begin speaking more and bringing to the forefront in the conversation the term risk. Right? Because insurance is something that everybody's like, ooh, that's a policy that I know I have to pay a lot of money for, but I never read it and I don't really know what's in there. And the only time I look at it is if I have to file a claim. Unfortunately, I think that cuts across the board, whether it's on personal lines, commercial lines so often. And that's not the way that I think we as people who really thrive, on insurance and care about it so much, should approach the conversation with others. We should approach it with the concept of risk in mind. And then that whole context that you just laid out, that whole network of risks associated with whatever, with some aspect of our life, then that all comes to the fore, and then people care about it more. And there's an emotional investment in, oh, wait a minute, I need to protect these assets, protect this stuff. The way that so often when people start talking to me about insurance and, okay, what do you do with captives and all of that? And if I start explaining it and their eyes glaze over, as it happens at times, I kind of step back and say, insurance, risk, this is the matrix. There's nothing anywhere that you exist right now in my office. I can see cars going by. I see, people walking around. I'm using technology. I'm talking to you all. Name one thing, one product that we're utilizing, or how we got to our offices or where we are. Name one thing that insurance doesn't touch. And I mean, I've yet to find out what that thing is, and once you again start changing the conversation like that, then I think people engage with it more. So, anyways, that's what I'm looking for.
Yeah. Well, and I'll be the counterpoint to Lars, which is like, Joe, it's hard, right? Oh, I open the app up, and here's the life insurance app. Okay, there's one set of words and laws I can say here. Now I want to push you over to property and casualty. Okay, that's a whole nother set of laws. Got to be licensed differently. I can't change pass this information over from this product to this one unless I have it gets complicated, right?
Yes.
How from your perspective, you've been in the regulatory sector for it's a good time, not that long, but how do you see the regulatory framework and structure and teams sort of taking away the barriers that may have existed to creating that app that Laura described?
Yeah, that's good. I think the first step in that process would be to bring regulators to the conversation earlier on. I think again, regulation is okay. You're dotting I's and crossing T's and making sure that statute is followed. Okay, I get that. But if regulators were on some of these initial conversations, I think that would help as products evolve. But again, I also think that that the private sector and industry will drive that in so many ways because, ease of use applications, ease of use policy language, how consumers, how readily available they find what their policy actually says. All of that is going to, I think, really drive competition. So it's bring regulators to the conversation early, and then watching what the industry does and how competition drives just increased efficiencies.
Okay, I'm going to give you. This is sorry, John. I'm going to throw some curveballs here. So, Joe, tell me if hard, easy, dumb. Idea number one. Okay, this industry we've been focused about. It's all paper based up to this point. And really, you kind of look today, we want to file a product in any state. What's the first thing they ask for? The PDF of the paper document to prove. And all the write-ups, the markups come back. In the state of Idaho, it's got to be 11-point font, and it's got to be 9-point font in Minnesota. You can't make this one. John, you can't make it up, right? But it happens, and all well-intentioned. Okay, but then, we try to go and communicate between all these companies. Some of these companies, you can't send stuff electronically into them. I mean, we're getting better. Boom, I'm like the czar. Okay, you must file your API with every single product filing that gets made. Now, is that crazy?
Yeah, it's cumbersome and it's burdensome for sure. But also to understand the logic behind that, it's the intent behind that. I should say, maybe not logic. The intent behind that is a good thing because we as regulators want to make sure again that on the the other side of solvency is also consumer protection. So what standard of consumer protection must there be? Is there in the small font all the way at the end? Is there things that would really impact this consumer that they need to know? So you hope that companies act in good faith and with the consumer ultimately in mind at the end. But at the same time, I think there have been companies that have maybe not approached the way they've sold their products appropriately. So you say, okay, where's the balance there? And that's the Gordian knot to cut right there. How do you strike that balance?
I agree totally. But then it's the next step is I want to get my data from here to there. What is it? What's that connection? John, you've been there too. Another one. Could we say all these disclosures have to be written at a 6th grade level? Is that crazy?
Well, I think for the consumer, but no, it's not. And I think that seems my experience in a regulatory environment. I spent more time dealing with consumers who were quite unhappy with the market conduct, or they're not understanding. And it's like, I go, well, you thought you bought this, but that in fact, it's the contract that governs this, and the contract doesn't cover that. What you bought doesn't cover that, even though you thought you had it. And that is an issue. And that's why we have to reposition it so that it's very understandable to the consumer. And we have to remember that not all consumers have a post-secondary degree to enable them to work through a 32-page contract. So I think you're absolutely right. But I think kind of underlying that, and Joe was getting dangerously into this area, but I think from my perspective, there's a change, and I have seen it happening already, and I think it has to accelerate, is moving from sort of a rules-based approach to regulation to a principles-based. So that it looks at the issue more broadly, other than what is it have the right font and the right size font, or is it really doing what it's intended to do, and does it provide something that the consumers need? And then figuring out how we make it work, and I think that's a challenge in front.
Yeah, I think it's. The opportunity I see regulators have is taking out the friction. So much of this is being done digitally. How do you make it do we need like an open insurance type of initiative like we've seen open banking, in Europe, to make it super easy for people to communicate or between carriers? I think that's a huge thing. I think, and it's a fine line in terms of the communication and disclosure, which is you want to be very, very specific so people understand exactly what they bought. It's insurance. It's not an investment product. It's what's guaranteed, what's not guaranteed. But a lot of people don't understand it, and I spend more time, helping consumers. I have one woman who's been chasing me down. She's unfortunately got my cell phone. She's been texting me over the weekend wanting to discuss her annual statement because, she didn't really understand what she purchased. Right. So, anyway, it's and that's a little more on the life and annuity insurance. But I just like to make, how do we make Laura's vision come to life? And it's not easy. It's not easy.
No, I will say one thing to follow up on that, Paul, is consumer education is key, and that's a collective effort between regulators, between companies. The more educated the consumer is, then the better off we all are. And so that takes time, that takes effort, but it takes time and effort on the individual's part as well, I would say. I don't think that there's any other product that we pay so much money for in our lives that we don't engage with more. My car insurance policy, how often have I read that policy, in the past several months? But yeah, every month, or every 6 months, I cut that check, and it's not cheap, So if I was to go spend that same money on something else, I'm sure I would, I know a lot more about it. And so how do we get consumers up to that point? And again, I think, as I mentioned before, maybe changing that conversation about risk and say there are inherent risks associated with this endeavor or this part of your life. And this is why you, again, would care about it more. And when you evoke those emotions with it, then I think you get more of a buy-in from people.
That's very interesting, because I think when you talk about this distinguishing between risk and insurance, because I think as an industry and in our consumer world, we almost sometimes think of them one and the same, and they're very different. And I think an opportunity that's going to start to change people's thinking when you change the conversation and they understand the difference. And when you have somebody who thinks they have insurance, that it's a guarantee. No, it's not. It's basically you have some protection as long as it's covered under the contract. But if the contract wording doesn't hold that up, then you don't have coverage. And consumers have a hard time coming to grips because they think of insurance as being like, solid as a rock and always there and is going to take care of me, and it may or may not happen. And the other piece is, and I don't mean to wade into sort of a controversial world, but there's a lot of people and a lot of organizations that make a lot of money off of friction in the system, and as that's kind of another area and probably a whole topic for another podcast or two, on sort of understanding that frictional cost and the impacts of that frictional cost on pricing and to consumers, and as we start to think about innovating, how can we reduce innovation? It helps the consumer, but it may negatively impact somebody who has a business built around that. So it's very interesting and challenging, but it seems to me that one way or another, this evolution is going to happen. It's a matter of how do we control it and facilitate it and make it happen.
To kind of follow up on that from like a consumer's perspective, I feel like there are like two phases or stages of buying the insurance. For example, like the first step obviously is like purchase of the insurance, and then the next phase is kind of getting that service back for the premium that you paid over time, right? For a lot of the different kind of insurance that we have, for example, even if you take auto, it's become something that, okay, you buy the insurance because you're supposed to have the insurance, and that's kind of just the end of it. So what the consumer does is it would just go online, make a few phone calls, and just see, okay, who's giving me the cheaper insurance, and you just go with that. So the mindset isn't that, who's going to give me the best service, a lot of the times it's just that who's giving me the cheaper insurance, right? But then I feel like with the new generation, especially my generation and my own personal expectations from insurance, is going to be a company that's going to stay in touch. Not just that, they only think about you when you're supposed to pay the premium because, okay, you skip the premium or like get late by 1 or 2 days and they cancel your insurance in just a jiffy, right? So you don't want to just hear about that letter when you're supposed to make the payment, but you want to hear from the insurance company more often in terms of, I guess, even them having, I would say, interactive apps of where you can kind of learn more about what you can, avail the insurance for and what you can't avail it for. So I guess that also kind of ties into the piece of educating the consumer more through, I would say, different kind of apps and just being there. You don't want an insurance company that just you pay them and they're gone. They just come to you to like collect the payment and the premium, and that's the end of it. You have to go to the next step of thinking about what's the service that the consumer is getting at the end of the day.
Well, Girik, it's kind of interesting. Technology, the more technology we have, sometimes the back to the future we go. Like, think about Allstate Insurance. Where did Allstate come from? It really came from a mail order catalog, Sears Roebuck, right? Yeah, I mean, it's interesting where, the originations of this. I worked for MetLife for some time, and they actually at one point in the 20s and 30s actually had a visiting nurses program going out to the tenements and apartment buildings in New York, visiting the life insurance clients to make sure that they got proper medical care. Now look at what Amazon is trying to do in Seattle. It's interesting. I mean, these questions, I think we're all spot on, and I think we're seeing the same needs, and the same needs persist, Joe, but how we meet them can change, and I think we can do some crazy good things here in the future.
I agree, and I'll just jump in and say this, kind of to follow on what you're saying, Paul, and Girik, what you said as well. We're talking about big data. We're talking about AI. We're talking about the transformation, the digital transformation, right? However, look what it consistently comes back to. It comes back to the human element that was mentioned earlier in the conversation. It comes back to people. It comes back to relationships and engagement with people, customer service, and the qualitative elements that are so important to us as people, as human beings. The quantitative aspects of it, that's huge. I mean, that's a major piece of it, of course, and obviously that's on the forefront of everyone's minds. But looming behind that, I think, is this again qualitative aspect of it about, hey, ultimately it is someone who is purchasing this, and this is going to impact their lives, and how can we develop that better?
Well, speaking of the human element, machine learning's interesting. John, I went on. This is, I don't know, 4 or 5 years ago. Got one of those books, big thick books on teaching yourself machine learning. It was fascinating to actually go and download stuff and say, wow, okay, finally kind of get this in my head. And, Joe, I see regulators, I think it felt like first were focused on the privacy aspects of machine learning, maybe not necessarily in this order, but privacy, like does a company really have rights to this data? Has a person given consent to, is the model discriminatory? Is it really using decisions that are acceptable? Having done my little science fair kit, projects, therefore I'm an expert in this. There's a training component at the end of the day, because you run these sets and you're going to say, it's cancer. No, it's not. Yes, this is a safe driver. No, this is not. Yes, Laura should get, is a good chicken raiser. No, she's not. That's another. We'll have another discussion on that one. Have regulators started to look at that training component of these models when people are coming back and looking and tuning these things? That to me is another critically important human element in this equation. But I don't see a lot of attention being paid to that.
Yeah, no, that's a solid point, Paul, and I don't believe that there is not the level of attention that should be being paid to it because of the advancements that are being made. I think that is just, again, the efforts of the NAIC and that H committee. I think that's what's trying to gain traction to look at these very things. But again, it's so often the regulatory framework is something that is an after effect. And that's what, again, trying to change, but also it's almost necessarily so. You can't put the regulations in place for something that's so new and never, that no one knows if it's going to get off the ground or it's getting off the ground as it's changing, as it's evolving itself. Right. So it's a complex issue, but that's a really solid point. There's certainly more attention that could be put in that in that direction by regulators.
So it's interesting, right? So we started this conversation about 20 some odd minutes ago, and it started with technology, and now we've gone almost forward to go back forward, where we're looking at the human element. So is it safe to guess, or one assumption could be, in 2030 we may find ourselves with insurance companies in the world that are actually B Corps, because it's no longer just about what's coming in on the Excel files and the sheets, but also looking at the double and the triple bottom line, where we're working through apps that are teaching us, but there's also the human component because we want to connect together. So we want it all, we want none of it, both at the same time. We want humans, we want big data, we want AI, but we want well-trained people and well-trained data, because we want a diverse talent pool at the same time that we want diverse and accepting technologies and data to then initiate and establish a place where people can be insured or heard or seen in a fair and meaningful way, with controls and facilitation around it. So what are the odds, right? Or if you were going to put some money down on it, do you think we're going to see something like that, or do you think that that's still just a dream, a cloud away? John, what do you think?
Well, I think until there's a reality here, and first of all, Girik started as I was talking about the Jetsons, which was that was like a flashback for me, because I can remember I thought by the year 2000 we were going to have flying cars when I was growing up, and that didn't happen. But what I think we have here is that there's the needs of the consumer are being recognized and coming up. And I think there's no shortage of ideas, but the critical issue comes in terms of the how do we put those into place, and who needs to change, what needs to change, and how do we do that so that if we keep thinking, I think, about the consumer rather than like, I don't want to do that because that means it's going to put a wrinkle in what I do. Making us all think in an agile way and making it happen is understanding the importance, but keeping the consumer, the risk owner at the center, and making informed decisions about that versus moving forward, trying to protect what we have and realizing that we have to take all those constraints off in order to solve the consumer's problem with risk. That's kind of what I see is happening in order to break this log jam.
So another related but different question, if we turn it on its head, can machine learning make the regulators more efficient or effective in the next 5 to 10 years?
I hope so. Anything that can make us more effective or efficient, I'm all for. So let's try it. No, I mean, I think as these technologies will, as they become employed more often in the industry, then out of necessity, we'll have to understand them better and begin to employ them on the regulatory side as well. I mean, I think that's there are opportunities there. For sure.
Yeah, John. One question that's kind of in my mind, over the last couple of years is, could you have like a standardized, machine learning model approved and created by regulators for suitability, for sales of life insurance and annuities? Take the guesswork out of the cases that we're reviewing. I don't know. There got to be some uses there.
Yeah, I think that there is uses there, and I think there's a great opportunity to build the business case based upon just it's trust me, it will work. Or the other extreme is like, you got to prove and continue that it won't work in 0.007% of the case, so therefore it's a bad idea. You got to be able to take that off, and the regulators are there for a very strong purpose. I love Joe's reminding us that it's not just about solvency; it's also about consumer protection, and the regulators are always going to be there to put the rails on the guide side to keep us from going off the road. But I think machine learning can, I think, bring forward data that will say, oh yeah, I can see how that can work, and open us up to new thinking and get us more comfortable with emerging risks that we haven't necessarily faced before, whether they're climate change risks or whether they're pandemic risk or war risks. We're going to have to look at those things. War risk, for example, we have several generations now that haven't had to deal with the impact of war. But we talked about this when we talked to the ESG investing, that all of a sudden war risk is real because all the insurance contracts exclude that. And so the risk owners are stuck with that. So now they've got to figure out, how am I going to protect myself, because war now appears to be more of a reality than it's been in 30 to 40 years. So I think there is a way with machine learning and sort of deep learning and using those new techniques, not looking in the rear view mirror, but using models to project forward to see into the future that may help us make better decisions. And I think not only do risk owners benefit from that, but so do regulators, and so do risk takers like insurance companies.
Oh, fascinating. So
we've talked a lot about the hows, but I want to get to the whys, right, as we wrap up our conversation today. Joe, why do you do this day in and day out? You could be doing a million other things, but here you are. Why is that?
Yeah, great question. And forgive me for saying this again, but quite frankly, it's the people in this industry. It's the people I've met along the way that have impacted me in many ways, that have, that opened the doors for me in this industry. I mean, that's what happened. It was them, who they are, who they were striving to be, what they were striving to do, that had a profound impact on me. And because the nature of risk and insurance for me is fascinating. Again, if you buy into this analogy of the Matrix, how can insurance touches everything? So no matter what someone's involved in their professional life, it's like, well, I have an idea of how to, at least, how my industry touches that. And I like that a lot. Also, because insurance is so often misunderstood, I think it's the opportunity to, I won't say an expert, the opportunity to continue to learn more about what insurance is, the products, how it works, etc., has only added value to the relationships in my life, whether it's my personal relationships, professional relationships. How can I add some perspective or some thoughts that have helped someone, in my life. So that's why. What about you? Why are you in this world?
Touche, my friend. You were the first one to ask me that question. So for me, I like creating connections. Right. So in the world of the Matrix, everything is connected, and I believe that as well. So I was sitting in a different industry in the center of Hartford, insurance capital of the world. And it was just a great opportunity to use my creativity in InsurTech and just combining community with technology and everything around it. Because as you say, everything touches. So why not create some happy, creative combustion there? And here I am 3 years later.
I like that, Laura. And I'll say maybe through this podcast, we can begin to change this acronym of IoT from the Internet of Things to the insurance of things.
Insurance of things.
There we
go. So John, how do you possibly sum up this conversation? This is great.
Well, I thought I had it all figured out until Joe just sort of blew my mind with the insurance of things. I hadn't put that. But what I think is what we have is that there's definitely change, and you can't go to the grocery store or go to the gas station or watch the evening news without realizing that the change is out there and it's significant. And that impacts all of us, whether we're a consumer, whether we're an insurer, whether we're an intermediary that connects people and makes things happen. So there's definitely going to be change. And I think what my purpose in life is I love to figure out how things fit together and then figure out how do I reconfigure them and make it work better. So I think that what we see with what we have here today in the future of insurance and risk is, and the insurance industry, is that everybody has to, take their blinders off and open their heads and think differently and have conversations about, it's not keep away or stay away. It's not about, not telling the insurance company about some of the risks that are there. Just hopefully they'll take them without knowing, or having insurance companies saying we don't take people that have two different eye colors or something like that. It's absurd, but there are strange rules. Take that away and open it up and look at new tools to understand what the future looks like, rather than relying on the past as a predictor of the future.
Excellent. All right. Hey, well, listen, Laura, John, Girik, Joe, it was great. Thank you so much. Joe, thanks for your time. And listen, tune in against next week for another interesting episode of the Reimagine podcast. Thanks, John. Thanks, everyone.
Thank you all. It's been a real pleasure.
Great.
Thank you.
Thank you, Paul. Thanks.